Hi, I'm Martin Lewis, and I just wanted to take a few minutes to explain to you a little bit about the Mental Health and Money Policy Institute. The idea behind it is based upon the fact that, sadly, if you've got mental health issues, you're up to 6 times more likely to be in debt crisis than everyone else. And if you've got debts and mental health issues, then your recovery from your mental health issues can take 18 months longer than if you didn't have them. So unfortunately, money issues and mental health issues are a marriage made in hell. And looking at this has been a passion of mine for many years. I've written a guide to mental health and debts, but what I wanted to do now was take this a step further. Over the last decade, we've seen great strides in the mental health world. Thankfully, the stigma about mental health has diminished somewhat. And more so, financial institutions have started to take it seriously. If you have a problem and you have mental health issues, then they are much more sympathetic than they used to be. There's still a journey to be had there, but things have improved. But what nobody has really taken notice of is how do we prevent this horrible marriage between the two in the first place? And that's what this Policy Institute is about. Researching why the two are linked, coming up with policy solutions that could help break the link, and then getting those policy solutions into place, talking to regulators, talking to politicians. Now, there's many ways that we can do this. I'm going to give you a couple of examples, but we're just launching this institute, so don't take these as a fait accompli. These are talking points, if you like, totemic ideas of what we could do. The first one. When you go abroad, if you spend on your credit or debit card and it has unusual spending patterns, they will often cancel the card or curtail your spending on the card until they get in touch with you for you to approve it and say, actually, it's fine, I am abroad. So why not have a voluntary register where you can put your name on a list and it says, if I have unusual spending patterns, I want you to freeze the card and then call somebody I've nominated, a trusted friend, who can say, actually, they're just moving house at the moment, it's fine. Or say, yeah, let me look into that. I want to check that things are okay. So that's one classic policy idea. Let me give you some problems with it. First of all, there isn't a trusted friend in law. No credit card company or bank could do it even if they wanted to, and I've spoken to some and they like the idea. So we would need a regulatory or possibly a political change to make that happen, and that's what this Policy Institute is about. We also have to look at who's the right person to nominate. The obvious one is probably your spouse. But spouses can be enablers of these type of things. If you're going through a bipolar spending spree, is your spouse really the person? Do they really want to stop you when you're thinking that you can rule the world at that moment? So the idea is, who do we find who's right to stop that? And that's part of the thing that the Policy Institute would do. Another classic example is, can you put a freeze on your credit file? Now what this would mean is, you put a freeze on your file, and when you want to unlock it, because you're going to apply for something, there is a 6 or 8 week period before it's unlocked. So if you are somebody who has a temporary mental health problem, whether it's a depression-based spending spree, anxiety, bipolar, any of those things, you're able to put controls on yourself when you're healthy to protect yourself from when you're unhealthy. And those are some of the concepts that we're looking at. It's really interesting. We live in a society where if somebody is trying to defraud you, you can put controls in place to protect you from other people, but you can't put controls in place to protect you from yourself. So that's some of the first things that we'll be looking at. And in many ways, we don't want to stigmatise this. We wouldn't, for example, call that option the mental health option. We'd call it the high control option on your credit spending. And what we want to get into a position is, in 10 years' time, it becomes totally normal that when you sign up for some form of credit card or spending or other form of debt, you're asked what type of high control option you like. You could say to them, I'm bipolar. Nobody blinks an eye because we accept 1 in 4 people in this country have a mental health issue. There's no stigma attached, and it's just a normal part of everyday financial protections, helping you protect you from yourself. Of course, at the moment, that's a pipe dream. But if we can get this to work, it helps the individual, it helps the lenders, and actually, because we know that debt problems are a contributor to mental health problems, and therefore you've got treatment on the back end that has to be done, if we can start to fix that problem, it helps the economy too. To finish, I've done the positive. I just want to paint a little bit of a negative picture, because I think it's quite important for people to understand why this is so important. If I broke my leg today, then I'd go into accident emergency, my leg would be set, it would be very painful, I might not be able to work for a few days or a couple of weeks. Hopefully sick pay would kick in because I would have contacted them, but after that point I might not get some sick pay, so it could impact my income, but I'd be able to deal with the bills and get on with my life, and things would get sorted after a while. If I have a mental health breakdown, part of having a breakdown is that your decision-making ability is impaired. So you might not tell your employer you're having a problem. You might just not turn up to work because you can't cope with talking to them. You'll then find that your income is diminished. You can't cope with talking to the credit card companies and the bills and the gas and electricity company or anybody else because you've gone into your shell because you can't cope with your mental health issue. But the appointment in mental health isn't tonight, it's in 10 weeks' time. You've got 10 weeks of having to deal with this horrendous issue that you've got going on where you're not dealing with any of the other normal externalities that you face. In 10 weeks' time, you might start to get treatment, and if you're lucky, 10 weeks after that, you're getting better. But that 20-week period will have been catastrophic for some people's finances. And it's not that you'll recover from that in a month or two. It could be 10, 15, 20 years later. So we really need to look at this horrendous issue that mental illness and money problems can cause when they're married together. One solution is a real parity of treating mental health and physical health. But there are lots of cheaper and easier solutions that we hope to look at by working with people who have experience of mental health issues, both people who've had mental health issues themselves and practitioners in the industry and the great charities out there that would deal with it. Looking at the finance sector and what they can do and financial technology, working with regulators, working with politicians, getting everybody in a room saying, everybody wants this to be better, it works for everyone, how do we make it happen? And that's why I've set up the Money and Mental Health Policy Institute. Polly McKenzie is going to be running it. I'm Chair of Trustees. Polly's absolutely brilliant, got huge public policy experience and knows everybody who matters on the political and regulatory side. I know a little bit about talking to people about how money works, getting a message across and lobbying with financial services companies. So fingers crossed, by doing this, it'll do some good. And I've put funding in place that this is going to be on and running for at least the next 4 years.